You are listening to ChartingWealth.com for Tuesday, the 11th of July, 2017. If you've not seen the newest video that we produced, it's how to use our trade worksheet. The trade worksheet is available to everybody who subscribes to our daily market review. It's free. It's easy to get. Just go to ChartingWealth.com, sign up there at the website, put in your first name, your email address. We do not send that list to anyone else. We do not share it with anyone. We do not spam it. You will receive every day the markets are open, our daily market review, plus once a week our weekly market review, plus you will receive free of charge the link to our How to Read a Stock Chart video, the layout that we use at freestockcharts.com for free. It's the layout that you see on the video podcast of this daily review, plus you receive our trade worksheet that we just did the training on how to use it, daily market worksheet and the weekly market worksheet. This podcast lasts right around 10 minutes of meat, and we want you to listen, fill out the daily market worksheet while you listen. When we talk about trading opportunities, we want you to virtually trade. Go find the ETF at the proper buy point, buy it virtually. You can set up your own online trading account at any of the online brokers. Almost every single one of them has a virtual trading platform. It works almost exactly like a real platform, and you get to practice. You get to see what it's like to put in a bid, to sell at an ask. Again, it's wonderful. It's great training, and it is so important. If you just listen to us every day and you simply follow along and think it's really cool, and think you're learning a lot, you are, but you're not getting anywhere. And you're missing about 80% of what you could be doing. As you listen, fill out that daily market worksheet once a week on that weekend podcast that we do, the one that is the comprehensive review and forecast for Monday. We always put that out on Friday unless there's some emergency. You can listen to it over the weekend, fill out the weekly market worksheet, and then when we talk about trades or you see something you want to practice trade, please go in there and use that trade worksheet. Listen to it. We have loaded it up at the website under the training. It is the trade worksheet, how to use the trade worksheet. Extremely important. If you will do that, if you will fill out the daily market worksheet and do practice trades and use the trade worksheet, you will supercharge your training. This will go so much faster, so much better. It will help you out a great deal. What's going on in the charts today? S&P 500 up 0.11%. The Qs, that is the NASDAQ 100 up 0.65%. TLT up 0.16%. And gold up 0.16%. So for the most part, markets barely up across the board for the day. Let's jump first into SPY. Of course, SPY is in a weekly downtrend. As per our weekly chart, we had the weekly vertical crossover for the week ending the 23rd of June. And of course, it has been sliding sideways, tending down since then. We do have a weekly vertical trend line. We also have a 2-day trend line. We continue to see the weekly PPO, that's the price percent oscillator, which is our main indicator. It continues to move down. We also see that our DO, derivative oscillator, continues to move down. Also, it's accelerating in its downward momentum. Of course, the first day of the week on the weekly candle is up just a little bit, 0.11%. Let's tune in to that 2-day chart. What do we see going on there? Movement still well below the weekly trend line and below the 2-day trend line. We continue to see the PPO move down, not to the rate that it was on the prior candle from the 3rd through the 6th of June, but we do see that we have continued down movement for this, the candle that's ending on the 10th, Monday the 10th, representing both Friday and Monday, up a little bit, but again, that price movement still below both of our trend lines. As we look at our 4-hour chart, what do we see? We talked about this. This pullback has moved over and is pushing up. Keep an eye on that. It has pushed on the 4-hour chart at end of the day through the 2-day candle and is moving toward the weekly. The 2-day trend line is moving toward the weekly. Do be careful of that. Of course, we had our jumping in point when we had that rotation over back on the 6th, and it is retracing. So as we warned you, be careful. But again, remember, we continue to see down movement on the 2-day. and down movement on the weekly. So do keep an eye on what goes on over the course of the day on Tuesday. And if we start losing a lot of downward momentum, if indeed it continues to spike up in price, particularly on that 4-hour chart, may make you rethink any trade that you might be into. Okay, let's continue. But again, the weekly continues to move down, as does the 2-day. Those haven't pulled back on us yet. Those are still looking decent. Now, let's look at the Qs. Those of you who actually read the Stock Traders Almanac that we, of course, encourage you to have a copy of, you can still buy it for this year. You might even be able to find it discounted at Amazon. I do not know. I buy mine every year before the new year starts, and I pay full price for it or whatever Amazon discounts it at. It is, of course, put up by Jeff and Yale, his father, Yale Hirsch, who's been doing this since the 70s, I think. Yale's the son has actually taken over, and we are always impressed with what we find there, all the great information. And I would particularly turn your attention to the fact that they have followed the markets for many, many decades. And of course, the NASDAQ's worst 4 months started last week. You need to get yourself a copy of the Stock Traders Almanac and read what they have found there. Now, of course, throughout the course of this day, that is Monday the 10th, it is up 0.65%, but we have seen over the last 2 prior weeks lots of down movement. Again, the up movement that we had over the course of the day didn't push through the weekly trend line. It did break through the 2-day trend line on opening and closing. However, we see derivative oscillators continuing to gain downward energy. And of course, we see that the price percent oscillator is continuing to move down. As we go from the weekly chart to the 2-day chart, we can see where that break and bump occurred. 2-day chart's moving sideways on the, we've had flattening out completely. The price percent oscillator, we see derivative oscillators lost some of its energy, and we did break the 2-day trend line. So be careful there and watch it over the next couple of days. Of course, as we look at that 4-hour chart, we saw it break through going up and gave you that warning this last week when that occurred on Friday the 7th. So again, we have seen a spike up and a blow through the 2-day trend line. So be careful, continue to watch what's going on. Of course, we jumped into this downward trade back on the 27th. Don't want to lose what you have gained there, so just continue to watch this. If you were still in and did not get out after things blew through that, continue to watch and just see. Again, typically our weekly charts go on for weeks. And of course, we had that rotation over going down back on the 16th. And we see a sideways slide at this point, particularly after that huge down movement over the course of the week that ended this last Friday, the 7th of July. So just continue to keep an eye on what's going on there. Now, let's go continue to move on. TLT, the 20-year bond fund. We see that it has been in a continued down movement as far as the weekly chart goes for the last going on 3 weeks now, but hasn't had enough energy yet to basically move the derivative oscillator over and the price percent oscillator over going down. We still haven't had a crossover. May have one throughout the course of the week. If downward movement continues, of course, today, over the course of the day on Monday, there was up movement. We again still have the weekly chart in a confirmed up movement as far as the price percent oscillator goes. Derivative oscillator is getting weaker, as is the price percent oscillator. We'll continue to watch and see what we see there. Of course, that 2-day chart is in a down move, continues to move down. What is that? 4 candles in a row going down on that 2-day chart. If and when that weekly vertical crossover going down occurs, we will notify you as per our texting service. Again, how to sign up for that texting service for free, quite easy. Just text to the number 33222, the word charting wealth. We'll put you on that list and, of course, notify you via text. You get no more then 2 or 3 texts a month when we have those kinds of triggers go off. So again, those instructions on how to do that, if you didn't write it down right now, if you're a subscriber, it is in the email you get every day. If you're not a subscriber, be one. It's about as easy as it takes me to explain it. Okay, let's keep moving through. We're going to gold now. We're going to go to gold on the weekly chart. What do we see going on gold? Well, gold is continuing to move down. Weekly vertical crossover on the week ending the 30th of June. That 2-day crossover going down happened back on the 16th. Gold was up a little bit for the day, 0.16%, but we have, 5 weeks going on, 5 weeks of strong down movement. Down movement's well below the weekly trend line and down below the 2-day trend line. Let's take a look at the 2-day chart. We see that it's continued to accelerate on the derivative oscillator and on the price percent oscillator. Again, strong down movement on gold. As we tune into that 4-hour chart, what do we see? 4-hour chart could be bottoming out. If you recall, back on the, around the 2nd and, around the 3rd of July and the 5th, we saw what looked like a bottoming out somewhere around 116.13. It drug sideways for a while, then dropped again down to around 115.15. So keep an eye on this 4-hour chart. See if it's just leveling out, taking its breath again for another plunge. And remember, this 4-hour chart is our real total chart. What it does, gold tends to do. And of course, when you have the weekly and the 2-day going down and you see the 4-hour rotate over, by all means, it typically is going to, for sure, not for sure, nothing's for sure in the market, but it appears most of the time to be very likely to continue moving down until we get into the months of December and January when that 4-hour chart stops working. Folks, that's where we are as we end the day on Monday, go into Tuesday, the 11th of July. We thank you so much for being with us. You have questions, problems, concerns, let us hear from you. You can write us cw@chartingwealth.com. Please go to the website again if you've not already signed up for our daily market review. You need to do that. You'll receive the video and all the free information every single day. God bless. All the best from the entire team here at chartingwealth.com.